Good morning, everybody. My name's Alistair Wilson. I'm one of the tax partners here at MHA Tait Walker. Just whilst we give it 60 seconds for people to join this webinar, I'm just going to leave it here on, I suppose, what's my name slide just for 60 seconds, just so that people can sign in. Okay, just to introduce myself, so my name's Alistair Wilson. I'm one of the tax partners at MHA Tait Walker, and today we're going to be presenting on the off-payroll workers rules. These are commonly known as IR35. This is a follow-up webinar. Hopefully, most of you will have been able to attend the webinar that we did previously with our sister firm, McIntyre Hudson, as part of MHA. And this is intended to cover some of the practical aspects that typically the end user or the engaging business will experience as a result of the changes that come into force on the 1st of April. If we can move on to the next slide, Sam. Now, in terms of, I suppose, housekeeping on this, hopefully for those of you who have been on a webinar with us before, you will be used to the format that we use, which is at the end, we will try and cover off any questions and answers that have been raised through the webinar. Now, in Teams Live, which is the platform that we're on, there is a Q&A function. Now, that Q&A function is at the top in the little taskbar, and it is the one that is two bubbles with a question mark. If you do have questions as we go along, what we would propose to do is we'll try and answer them as the webinar is progressing. But if there's something that's very specific, I would suggest that we answer that with you directly rather than talking about what might be your confidential circumstances on this event. Alternatively, if it's something that's generic in nature and which applies to a lot of businesses, we will try and answer it as we go along, but also we'll try and answer it, I suppose, in the Q&A at the end. We'll try and use that to round up any questions. If we can move on to the next slide, Sam. So in terms of the speakers today, I'm going to do an introduction, but I'm also going to do a little session at the end about trying to make compliance with these rules easier. Claire Williams, who is the Senior Employment Tax Manager, will cover off an overview in terms of what the rules mean. And then Katie Gardner and Claire Brown from our payroll team will also then cover off what it's likely to mean for you as an engaging business where you have got what would be contractors or workers who are going to be deemed to be inside IR35 from the 1st of April, and where you need to then deal with that as part of your payroll processes. So hopefully that agenda shows you that it is a little bit of a follow-on exercise from the previous webinar that we've done. And so this is moving more into the practicalities of dealing with the rules. I can move on to the next slide, Sam. So that's our agenda for today. It's a summary of the new rules, the payroll implications that you may face from persons who are deemed to be within the IR35 rules, and then what can you do to try and make preparing for April the 21st easier. And with that, I'm going to hand over to Claire Williams, who will take you through the first part.
Thank you, Alistair. As Alistair mentioned, I am a Senior Employment Taxes Manager, so I lead our Employment Tax Advisory team. I'm just going to take you through at a very high level the changes that are coming into the IR35 rules. And as Alistair said, the main purpose of today's event is to focus on the practical impact on payroll teams. If you want more detail around what I'm talking about, the webinar that we did recently with our McIntyre Hudson colleagues is something that you should have a look over. And I do believe that was sent out on the invites that you all received to this webinar. We can move to the next slide, please, Sam. So the summary of the new IR35 rules, why were they brought in? The reason that they were brought in was to ensure that individuals who work like employees, but via some kind of intermediary, which would typically be their own personal services company, to make sure that they pay similar taxes to other employees. So you'll see here that I've put in a little diagram that shows an end client who engages with an intermediary for the worker at the bottom to provide personal service to that end client. And that's the kind of contract that's going to be caught by these rules. There may also be agencies in that labour supply chain. But basically what was happening was the individual would draw a dividend from their personal services company, which has received the full value of an invoice into it. Whereas Hmrc look at it and they say, well, that person is simply providing their personal services to you as the end client in the same way as your employees are. So really they should be paying tax through the payroll in the same way as the employees are as well. So these rules have been in place actually IR35 since the year 2000. So they've been in place for 21 years, but actually the obligations have now been moved to the end client, whereas previously the obligations to pay the right amount of tax and to make any adjustments fell on the worker. So the new rules that place the obligations onto the end client come into place on the 6th of April 2021. One thing to note here is that the intermediary will still continue to invoice the end client in exactly the same way. So they will be invoicing end clients for, say, their labour costs, direct materials, expenses incurred, and obviously on that invoice they will still charge VAT. The only difference is that when that invoice is paid and it's assessed as being in respect of a contract that's under the IR35 rules, such that IR35 applies, then when the invoice is paid, the end client will be required, or the fee payer, whoever's paying the fees to the intermediary, whoever that business is, will be required to deduct tax and national insurance from any taxable elements of that invoice. Katie will come on to some examples of kind of different streams that you might have within the invoice and how they're paid, but the VAT will be paid completely across the intermediary, as will any non-taxable items, such that you only suffer income tax and national insurance on taxable items in the same way as an employee would. We can move on to the next slide, please, Sam. So this slide is just talking about how you, what the changes are and who they apply to. So the changes apply to medium and large size clients within the private sector. Those businesses will be responsible for determining whether the new IR35 rules apply. When you assess whether you're medium or large sized, you have to look at whether the small companies exemption applies or not, because if the small companies exemption applies, you are not a business that is impacted by these changes. The small companies exemption is per Companies Act 2006, and it requires 2 of the following 3 criteria to be satisfied. Criteria are turnover of less than or equal to £10.2 million, a balance sheet total or net assets of less than or equal to £5.1 million, and 50 employees or less. This criteria applies right across groups. You can't have a situation where you've got a medium or large size group and there's a small company within that group that engages with all the workers. Hmrc saw through that, so they included provisions to make sure it applies group wide. So as I mentioned on the previous slide, the fee payer, so whichever entity in your labour supply chain is paying the workers intermediary, will need to withhold PAYE tax and national insurance. So they'll need to have a payroll set up to make sure that they're making the deductions correctly. The end client that's been assessed as being medium or large will have a requirement to issue a status determination statement. I'll come on to that shortly. And they need to issue that status determination statement to both the worker, so the individual, as well as any entity that they're engaging with within the supply chain. That status determination statement then needs to be cascaded through the whole labour supply chain. So if you've got various agencies in the chain, it needs to be cascaded along those agencies until the point it reaches the fee payer, so that they know whether they need to withhold tax and national insurance before paying the invoice. If there's any failure in the cascade of that status determination statement, such that it's not passed on, then any PAYE and national insurance that's due falls on the business that failed to communicate the status determination, which means that Hmrc will expect that business to pay the tax and national insurance that's due. If for whatever reason Hmrc cannot collect the tax and national insurance due from the fee payer, there is the ability for Hmrc to transfer that liability. It doesn't go right back along the chain, it will go straight up to the first agency within the chain. And if they can't collect the money from that agency, it will go straight back to the end client, so the recipient of the workers' services. Therefore, it's really, really important that you undertake due diligence on any labour supply chains that you're using, and you look right along that supply chain. Make sure that you're comfortable with that supply chain. And the final point that needs to be considered in the new rules is having a status disagreement process in place. So the end client, who is responsible for assessing the workers, must have this process in place, which means that if a worker or an entity within the chain disagrees with the determination that you've made, they can come back to you and state that, and you have 45 days in which you need to respond. You need to respond to say either we stand by our original assessment and that status determination statement that we issued continues to stand, or you need to look at any new evidence that's been presented, reassess the worker and issue a new status determination statement and withdraw the previous status determination statement. You've got 45 days to do that. So we can move on, please, Sam. So who are the changes likely to affect? I mean, we've talked through the supply chain, but basically it's going to be the worker or the individuals that are supplying their services via an intermediary to medium or large sized businesses. Obviously, when the money comes into their intermediary, and a contract's been assessed as being inside IR35, then they'll receive less money because obviously tax and national insurance has already been paid over to Hmrc on that. They also need to think about how they draw money out of their business as well, because that's going to change. Medium and large sized organisations obviously are going to have a lot more obligations. They're going to have an education piece to do with workers within their business, within their own employment, just to make sure that everything is done correctly, because there are a lot of new responsibilities on the end client. And it's also going to affect recruitment agencies or other kind of labour supply chain intermediaries in respect of both cascading the status determination statement and potentially, if they're the fee payer, so the one that's engaging with the workers intermediary, they will have to be the ones that run a payroll and deduct tax and national insurance. If we can move on, Sam. So I've talked about issuing status determination statements, and people are probably thinking, well, how do I determine status? How do I work that out? We did talk again about this in a lot of detail in the seminar that I did with McIntyre Hudson recently that you have the link to. So don't propose to go through it in a lot of detail because, quite frankly, I'll probably lose you completely. It's based on 21 years of case law, so there's a lot to think about. The first thing that you need to look at, though, before you even get into status determination factors is the service that I'm receiving from this worker. Is it actually a supply of labour, or am I receiving a fully contracted out service? The most simplistic way that I like to think about this is, am I getting the finished product? Because if somebody's providing me with a finished product, the likelihood is that that's a fully contracted out service. On the other hand, if somebody is providing me with so many hours to, give me some consultancy services, for example, it's more likely that that's going to be labour supply. The three main tests when you're looking at these status determination factors are the three on the top line. So personal service and substitution. Is there an obligation on the worker to perform work personally? Can they send a substitute? Is there an unfettered right for them to send a substitute? So as the end client, do you really get any say in it? Do you get to say whether somebody is appropriate or not? Because if you do, that suggests that they can't send a substitute, or they don't have the ability to choose that substitute, and suggests that, they're inside of IR35. The second test I've got in there is mutuality of obligation, which is a really interesting one, actually, because it's the one that Hmrc failed to acknowledge in their tests. Mutuality of obligation is there a requirement, is there an obligation for the end client to offer work, And is there an obligation for the worker to accept work when it's offered? Because that would suggest an employment contract. If there's not that obligation, then potentially a contract might be outside of IR35. And as I say, you know, there's rather a lot of case law on this. The next test is supervision, direction and control. So that is the worker subject to the control of somebody at the end client, or is there a right for somebody at the end client to exercise supervision, direction and control as to the manner in which the services are performed by the worker? So it's kind of, is there a boss really? It's probably a simplistic way of putting it, but is there a boss? Is there someone who can tell that worker what to do? And the 4 tests I put on the bottom line there, they're kind of slightly lesser tests, but they are also important. So they look at whether the worker's genuinely running a business. So are they marketing their business? Do they have their own premises? How integrated into the end client's organisation is the worker? Are they involved in the appraisal process? Can they use the staff canteen? Do they have a parking space allocated to them? All of this kind of thing. How is the worker paid? Is there any negotiation in respect of the terms within the contracts? Are they just hourly paid in the same way as your employees might be? And that kind of thing. Are they paid on submission of their invoices? That's another one that's kind of key. Or are they just kind of paid monthly in the same way as employees might be? And that last point on own equipment is, do they have to provide equipment that's fundamental to allow them to carry out their task? And that wouldn't include things like laptops and things that are kind of seen a little bit more as consumable items. That's likely to not really have any bearing on a test, but it would include things like if they have to bring plant to allow them to do their job, or whether that plant's provided for them. So, you know, there's a lot to think about in determining status, and there's not one factor that kind of makes it a yes or no answer, so it's not easy. But unfortunately, that's what the rules are. Can we move on to the next slide, please, Sam? So this last slide from me is just to kind of give you a little bit of guide on what you need to be thinking about before the 6th of April. So the first point, obviously, is review if you're small, medium or large for the purposes of these rules. If you're small, the new rules don't apply to you and your requirements are very limited. In fact, what we would say is just advise the people that you're working with that you're small and so you're outside of these rules. However, if you're medium or large or not small, then you would need to go through the process of identifying all of your off-payroll workers, both the ones that you work with currently because the rules will apply to them and any in future. You would undertake the due diligence process on your supply chain. We would recommend that you use Hmrc's check employment status for tax tool, which Alistair will talk about in a little bit more detail shortly. But basically, Hmrc have said that if you get an outside IR35 judgment from that and you have answered all of the questions appropriately, then they will stand by the statement that they've given you. However, you may then want to go on to use MHA Tait Walker's IR35 tool, which again, Alistair will speak about shortly, but that looks at a few more of the factors that I mentioned before, like mutuality of obligation. It will also help you identify if there's anything that you could change potentially within your working practices. If your practices are not set in stone, there might be some minor tweaks you can make that allow you to carry on the same kind of commercial terms as you are. So we'd recommend that you review contracts and working practices. The contract must reflect working practices, though if it doesn't, Hmrc will just look right through the contract. So there's no point in putting a substitution clause within a contract if it's never going to be used, for example. If you're medium or large, you need to issue and communicate the status determination statement that I've talked about, and you'll need to implement your status disagreement process. And again, if you're the one that's responsible for being the fee payer, so paying the worker's intermediary, then you need to ensure that payroll is set up appropriately to process payments. And Claire and Katie will take you through that process now.
Hi, My name's Claire Brown. I'm the Senior Payroll Manager at MHA Tait Walker, and I'm here to talk to you about the practical side of processing the workers through the payroll and about what you need to actually think about before you do that and how you set them up on your payroll. Next slide, please, Sam. Depending on how many workers that you actually identify that you have to go on the payroll, there's 3 different options that you might decide to look at. You can look to set up a brand new pay-as-you-earn scheme and run a completely separate payroll. You could decide to keep your existing pay-as-you-earn scheme and add them to that, but completely run a separate payroll. Or you could add them to your existing payroll along with your existing pay-as-you-earn scheme. Now, the first 2 that I've mentioned, I do have concerns over those 2 options. The one thing that you'd need to look at is cost. Will your software provider actually charge you for running a second payroll? I know with Sage they do when they look at the number of employees. You would also have to consider the apprenticeship levy, how you would actually calculate that, because it should only go through on one payroll. You'd have to take into account all of the group payrolls as well. And why actually go and manually calculate the apprenticeship levy if you don't need to? In my eyes, you want to keep things as streamlined as possible. So my personal option would be to actually add them to your existing payroll scheme and stay in payroll and set up a brand new cost centre or department. It'll keep everything smooth and straight, and it means that you only need to submit your EPS through one payroll. Because you've got to bear in mind, if you do choose the option to have them on separate payrolls, you will only be able to do the one EPS. So you're not only just manually calculating the apprenticeship levy, you're actually going to have to make sure that you combine the figures together and only submit the one. And you'll have to make sure you're consistent and that you process that through one payroll. Next slide, please, Sam. Once you've considered how you're actually going to process the payroll and you've decided which scheme you're going to use, you need to consider the actual payment process. Now, we all go to work to be paid, so we need to make sure that it is processed correctly and on time, and that everybody understands when they're going to get paid and how. Now, currently, you might receive your contractors' invoices through and you'd be paying them maybe on the 25th of the month, but your payroll is actually paid at the 31st. You need to decide, are you going to actually streamline those dates? Are you going to bring everybody in line? You need to look at your own cash flow purposes and see if that's actually going to be feasible to put everyone through at the same time. Or you might decide that you're going to make those payments twice in a month. It's a little bit like, the way I look at this is when I've dealt with CIS, it's very similar. You will have some of the tax elements going through for tax and NI purposes. So you've got the labour, which will be tax and NI'd, and then you've got the cost of travel to actually work, home place to work, sorry. You then have your other business travel, which will be non-taxable in your VAT. You might choose to actually process the VAT and the non-taxable expenses partway through the month. And then you might choose to process the payroll side actually at the end of the month. Or you might decide payroll will calculate the payroll figures and provide them to your finance team and they will make the payments. Or, as with everything, why make things difficult? If you're in a position where you can process everything through the payroll, it just keeps everything streamlined and smooth. Katie will show you exactly what a payslip will look like later on in the webinar. But I do think it's clearer to have everything on the payslip. It's much better for an audit trail as well, especially if there was a wages inspection or if there was any queries regarding their pay. You need to ensure that this worker knows when they're going to get paid and how they're going to receive a payslip. Communication is key. You need to double check with the cash flow, make sure that you're happy that all payments are going to go through at the end of the month, or if you're going to split the payments. It's all going to depend on your business and also how your admin process works, who's available, who understands the actual payroll processing and the workers. Next slide, please, Sam. Once you've decided on the actual main setup and how you're actually going to process everything, it's really important that you set the worker up correctly on the payroll. Now, currently, if you've run your own payroll at the moment for employees, you will all know that you normally receive a new starter checklist or P45 from your employee. But with the worker, I really would not suggest that you use the new starter checklist that Hmrc currently provide. I am hoping that they might actually issue a new one, but certainly at the moment, I can't see that happening. Now, the reason that I don't want the new starter checklist to be used that is currently used for employees is because there's the 3 options for the worker to actually tick to state which tax code that they should be on. If you could move on to the next slide, please, Sam. You will see on this starter checklist that I've drafted, you still have the normal details that you would provide on a normal checklist. So you've got the company name, you've got but this time you'd put the intermediary company name as well. You would have the full worker's name, date of birth, national insurance number, but you'll see there where it's highlighted in red, the tax code is basic rate. Every worker that goes on the payroll that is deemed within IR35 must be taxed at basic rate. So using the other checklist, I think, is leading, there's room for error. And depending on how experienced your payroll processor is, if they receive the new starter checklist for the employee one and just assume that they need to use that form, then you could potentially be putting them on the payroll, putting the wrong tax through, and then you're going to have to look at corrections as well, which I'll talk about in a second. The other thing to note on the starter checklist is to ensure that the bank details is actually for the personal service company. You don't want that to be the individual worker. And Katie will discuss later on as well on how they will actually draw down those payments. If you move on next slide, please, Sam. The start date should actually be the start of the contract. I need to make sure as well, whoever's processing the payroll or whoever's involved with the onboarding process for finance, is that they actually understand what that worker's been doing, what the contract is, make sure that they're asking questions just to make sure that they are actually deemed within IR35 and they shouldn't be going on the payroll as an employee. Because if there was, for instance, a company that did have his own limited company and he decided that he was actually going to come off that limited company, then he could potentially be looking at going on your payroll as an employee. Now, you need to make sure that you're aware if that's the case. You would like to think that obviously, as you've been on the onboarding and you've been going through the status termination, that you would have decided on what process that he would be going through. But you need to make sure that the person that's processing the payroll understands that process as well, because if they receive a P45 that has the normal personal tax code on there, they should be questioning that. They should be thinking, why has that come through that way? Which we know that it should be basic rate. So again, it's just communication, making sure that everybody knows what the rules are and how the actual process should be via the payroll. NI letter. That will be the same as it is for a normal employee. The majority of the time it's going to be category A, or it could potentially be category M. Again, it's just double checking their dates of birth and making sure that you're putting through the right category on there. Now, the next step is really important, is making sure that they're actually set up actually on the payroll as deemed under IR35. And if you go on to the next slide, please, Sam. This is a screenshot from Sage, and this is where you can see where we've circled that the employment type is deemed. Now, you have to still set up the worker as you would normally on a normal payroll, as if you were setting up a normal employee. But once you've done that, you need to make sure you go back into the payroll and go onto the employment tab and change that to deemed. If you don't change that to deemed, then when you complete the pension assessment, the system is automatically going to pick up that person and put them into the pension. Now, I know most employees, if they did get pulled in, it would maybe be postponed for 3 months. But if that wasn't picked up, and then on the 3 months when they would normally, if they were an employee, go into the pension scheme, that worker is going to also go in, and you potentially could upload that to the pension provider in error for deductions coming off. So you're then going to have to not only complete corrections through the payroll, you're also going to have to sort out corrections with the pension provider, and that can be quite time consuming to sort out. And not only that, you then could potentially make that worker disgruntled, and you need to make sure that they have faith in your payroll department as understanding how they should be processed. Next slide, please, Sam. The pay elements, you need to make sure that they are set up correctly. Katie again is going to go through what the tax elements on there. The reason I put the pay elements on there too is just because I go out to a lot of clients to review their payroll software and their processes, and I come across quite a few that will, when they get a new employee, they constantly set up brand new pay elements for each worker or employee that's on the payroll. And it's really just to highlight the fact, especially if you work with Sage, with the Sage Payroll is you only need to set up the elements that you need, and you can actually do a global change across the worker records to apply those. So you don't need to set up separate ones. I'm quite, if you want, once you've set up your workers, if you would like Tait Walker to have a review of how you set up and your processes, then please feel free to contact me and I can arrange to organise that for you. The other element that you need to think about is the pay method. As I said at the start, it's working out what you're going to do. Are you going to make payments twice in the month, maybe even more? It depends on your process and what you want to actually do, depending on your business. If you are going to do that, then I would suggest that you change in the employee record to make sure that it states cash, because if you have it set up as backs, you could potentially pull it through into your e-banking file in error. I'd like to think that everybody, matches their reports back to their banking files before actually processing anything. But mistakes do happen, and I have been told off Sage if you do leave it on backs and it is set as a deemed, it will still pull through into the backs file. So just be very careful on when you're setting that up. But once you've decided what you're going to do from the start, then hopefully you'll be able to set that up from the beginning. It's not something that you'll have to look at month by month. Now, payroll corrections, I know we've had quite a few queries about how you would deal with this. So obviously, if there is an issue where they've fallen in with the pension by accident or they've been set up as an employee, or if you've got your worker that's come back to you and it's actually now been decided they don't fall within IR35, what you would need to do, you would still treat them as you would an employee, in the sense of within Sage, you would roll back the worker. You would then process the correction through. You would then have to update your payroll and you will have to submit an FPS adjustment. You will also have to submit an EPS, which is the employer payments submission adjustment as well. And this will make sure that the pay-as-you-earn account is amended. And then you would actually reduce your pay-as-you-earn down the following month by the amount that's been overpaid to Hmrc. But ideally, a lot of the corrections should only fall within to do with anyone that's but has agreed that they are no longer falling within IR35. So ideally, any other corrections should be avoided as long as you're setting up correctly and making sure that they're set up within deemed. Next slide, please. I'll pass you on to Katie Gardner, that's also going to go through some of the other practical side.
Thank you, Claire. Good morning, everyone. I'm Katie Gardner and I'm the Assistant Payroll Manager here at MHA Tait Walker. I deal with the outsourcing of around about 350 payrolls along with the team. So it's just more to get you thinking on what you need to provide to your outsource provider or the questions that you need to start asking them. Next slide, please, Sam. So if you outsource your payroll, the first thing ask is your provider confident for the new rules? And the reason that we ask that is because we're coming to the end of the tax year now. A lot of the payroll systems are releasing their new updates ready for the new year. And part of that is covering the IR35 rules. So Claire Brown just before showed a screenshot of how we would deal with it in the Sage payroll, whereby the worker will be added to the payroll. We would be processing them as deemed, to ensure no pension liabilities will be coming off for them, but different systems work in different ways. We also run payrolls on Xero. Now they're completely different, the way that they're set up for IR35. So our teams have been trained in order on the Xero and the Sage to make sure we're ready for IR35 rules and any workers joining us. But you need to be asking your provider, are they ready? What do they need from you? And the impact on the payroll is all going to be with regards to how many workers you're going to have going through. And it's really important to start those conversations, because it could be, if you do choose to pay your worker outside of your normal payroll run, is there going to need to be a revised timetable to make sure that when you're submitting those workers' details, there's an agreement for how long your payroll provider is going to take to turn that around for. Is there going to be any amendments to the data submission template? That's something that we have in place for the majority of our clients. It may not be something that you particularly use with your outsourced bureau, but definitely ask the question, how do they need that data from you? How long of a turnaround are you to be expected to run that? And of course, are there going to be any potential fee increases? So again, Claire Brown was covering if you choose to have a separate payroll run for your workers, that could be deemed as an additional run and therefore it may incur different charges. So just start the conversation now, and then you both are aware of what needs to come through from both of you, and of course when and the turnaround times. Next slide please, Sam. So again, Claire Brown was covering that she has designed this off-worker new starter checklist. It's perfect for anyone who runs an outsourced bureau payroll because it's got everything on there that makes it really clear this is a worker, not an employee. We know that the tax code has to be BR. Obviously the bank details would need to be the personal service company, not the workers. So we would again know to ask that if the account name did come through a little bit not what we were expecting. But again, if you can use something like this or design your own, perhaps if that is in place with your payroll provider, then just make sure it's so clear, just to ensure that any of the tax and the pension liabilities are going through completely correctly, because ultimately as the end user, it is your responsibility to make sure that those are coming through correctly. So you need to be making sure that you're aware of what you need to be reviewing from your payroll provider. Next slide please, Sam. So this is talking through what both of the Claires covered with regards to the invoice. So typically this is what we would expect an invoice to come through as. So this could be what comes through to your outsourced bureau. So as you can see, the labour and the cost of travel from the home to the permanent workplace, those are the only two elements which should be subject to tax and NI. So it's really important, whoever's processing your payroll, make sure those are the only two elements which come through as taxable and NIable. Everything else, the cost of the travel for the business, the materials used, and any VAT that's eligible, those all go through completely exempt. And again, those could be the elements, those bottom three, where you do choose to pay those outside of your normal payroll run. It all depends on what agreement you have in place with your worker and ultimately what is going to work for you, time-wise, cash flow-wise, and also with regards to how long you've agreed to turn around those invoices from your worker. But it's really clear from that, if you were to provide that data in those clear 5 columns on a data submission, or in any way that you communicate with your payroll provider, it's really clear what's to go through as taxable and NIable and what isn't. So it just keeps everything really smooth for an audit trail as well. Next slide please, Sam. Now this is an example of what you would expect your payslip to look like, and ultimately you can see straight away by looking at the total gross pay versus the gross for tax, it's really clear what is going through as taxable and NIable, and obviously what is outside of that. The tax and NI only being calculated on the 2,500 and the rest of it is all gone through as exempt from that. You'll see there's no pension coming off, there is no student loans, as currently that's outside of it as well. And you can see the tax code in the bottom left hand corner is also BR. So if you just make sure with your outsourced bureau that you are getting something like this, whether it be a report or a pay slip, that you are able to check those across and you're making sure from your side you're happy with everything that's shown on there. And ultimately as well, it also shows the net pay, which should be going through to the employee, to the worker as well. Next slide, please, Sam. Now, this covers kind of the process as a whole. So on Claire Williams' first IR35 webinar, the most typical question that she was getting was from the Mr. Taits that were joining the webinar. So it was understanding for them how it affects them and the process as a whole. So obviously you can see Walker Limited, that is the end client. They have deemed the contract with Tait Limited, that's the personal service company, to be inside of IR35. They've worked out the tax and NI and their, of course, their employer duties, which is the employer NI and the apprenticeship levy. They've worked all of that out and they've made the payment to Tait Limited for £2,946. Now, what's important to remember here for the Mr. Taits who would be on this call is because that is classed as an employment and because you are getting taxed and NI'd through that payment, you can then have you can take that as a non-taxable, non-annuiable salary or non-taxable dividend from your personal service company. So you've got to remember, obviously, the VAT liability would still lie with the Mr. Taits. So the net of VAT payment would be 2336 in this case. But it's just really important just to understand this is an employment. So any payment that you receive from an end user to your personal service company minus the VAT is completely yours to draw down. If you then still decided to go through with a salary on your personal service company as a separate payroll, you can have your tax allowances through that. Now, I understand that's a lot to take in, and especially if you obviously weren't on the first IR35 webinar. So if that's something that we can cover with anyone outside of this call, we'll be more than happy to. But it's just basically to understand that the Mr. Taits would still have the VAT liability. Obviously, they can draw down that full net payment minus of the VAT, and that obviously tax allowances would still be able to go through on your personal service company because you will be classed as BR with the end user. Next slide, please, Sam. And I'll now hand you back to Alistair. Thank you.
Thanks, Katie. Now, my session at the end is really just to try and bring things back together a little bit and try and explain how you can try and make your life a bit easier in terms of being compliant. If we can move on to the next slide, Sam. Now, this slide summarizes who are the rules changing for. Now, you've heard that medium and large sized organizations, which are outside the public sector, where you're the end client and where you're engaging with workers through intermediaries, you have to do something different. You have to assess those contracts with the intermediaries. Now, the rules aren't changing for self-employed individuals who aren't providing their services through an intermediary. That doesn't mean that the individuals can't be deemed that their status is in fact that they're treated as an employee. Rather, it just means that in that case, what you should still be doing is using the check employment status tool that Hmrc provide to see whether or not Hmrc would regard what you are doing as a self-employed individual, that in fact they would deem that you should have been treated as an employee. And that distinction is really quite important. What is happening here is Hmrc are adding a compliance requirement, but what they're not doing is changing how the underlying case law or how the underlying technical rules in terms of status are determined. So this is a compliance requirement that if businesses don't carry it out, then the businesses can be held liable for a failure to collect PAYE in a way that they couldn't previously. This is one of the key areas that Hmrc see them being able to collect additional revenues, additional taxes from what they would class as non-compliance, which is ongoing at the moment, and where they can then help to use that to plug the gap that we have in the public finances now. So this is an area that Hmrc are going to take seriously in terms of what they do. And just, I suppose, one of the things that, again, for purposes of this call, individuals who are supplying their services through an intermediary, such as a personal services company, what you do still have to do is look at that particular contract and ask the organization that you're engaging with, are they small or are they medium or large? Because that changes who is responsible in terms of doing the assessment if an assessment is required. But what it doesn't do is change the status of that contract in terms of would Hmrc regard the individual who sits behind the personal service company as being treated as somebody who should have been on the payroll in the first place. And I'll come back to that in the questions at the end. If we can move on to the next slide, Sam. So one of the things that we've done to try and make this a little bit easier, in terms of Hmrc's check employment status tool, that is still something that we would recommend that anybody who is having to look at status, that they do use that as a first line of defence in terms of trying to work out whether or not HMRC would regard somebody as in a contract where they should have been on payroll because they are operating in a way that would deem them to be an employee. I will give you an example of that. Anybody who is an office holder, so anybody who is a director, or potentially for circumstances where you're providing non-executive director services, HMRC's CESS tool would automatically suggest that that is something that should be treated as being an employment contract because of the office holder status. Now, the check employment status tool, HMRC have said that if you fill it out accurately and if it gives an assessment, which effectively in this case would say that you're outside the IR35 rules, if you've completed it accurately, then you can rely upon it. The difficulty with the CEST tool, check employment status tool, is that it does have a undetermined outcome that quite often arises. And also it doesn't take into account the decisions that have arisen recently on what's known as mutuality of obligation. And there is a important case that has been taken and was won recently against HMRC, where because mutuality of obligation didn't exist, even though HMRC thought that some referees for what was the championship in the English leagues football, in that case, HMRC thought they should have been treated as being employees, but because mutuality of obligation didn't exist, everything else that HMRC were trying to say showed that those people should have been treated as employees. It fell down due to a lack of mutuality of obligation. Now, that's something that is missing from the check employment status tool at the moment. And so there may be circumstances where you get an undetermined result where a different assessment may enable you to come to a different result or a more accurate result. So we do have what is effectively an online status checking tool that runs through what is now more than 100 different questions to try and work out what the status assessment should be. And that number of questions will give you an indication as to how many different factors you can have to bring in to work out whether or not somebody should be treated as being a deemed employee or not. The online tool that we have would enable you to do an assessment for both your organisation, and the contractor or worker can run their own assessment, and that would enable them to work out, or the two of you to work out, whether or not you arrive at the same conclusion. And it does do a scoring based on a number of different factors. So that's something that does provide a way of looking at HMRC's answers and seeing whether or not a different view can robustly be arrived at. If we move on to the next slide. And so the online tool, what it does is it produces a status determination statement and also a detailed background of how it arrived at that answer. And it does also have serial numbers, etc. So you've got a record of the assessment that's been carried out and how it was arrived at. Ultimately, if you've used HMRC's CESS tool and that provides you with the answer that you want, and you've done so accurately, well, something like this isn't, I suppose it isn't needed. Ultimately, if you've used the CESS tool correctly and it provides you with the answer that you're happy with, then what we would suggest you do in terms of status determination statements is you append that to a status determination and rely upon that. We can move on to the next slide. This is just an example of the output in terms of the status determination tool that we have. So it produces effectively an outcome that says we believe that either your engagement falls inside or outside IR35, and it sets out some of the rationale as to why it has arrived at that conclusion. What it does also do, however, is include details of all of the inputs that you had put in, and so it can be seen how it arrived at that answer. One other thing that the toolkit that we have also produces is it enables you to do a size determination for your business. So if you're trying to work out whether or not you are a medium or large size organization, it will enable you to do that. If you are small, it will produce the wording that you need to provide to a worker to show what the status is and when it was determined. Equally, if you're medium or large sized, it produces the wording that you need for that. And we can move on to the next slide. So this brings this webinar to an end in terms of the presentation itself. Now, we did have a number of questions that we have answered as we have gone along. There were two questions on the same point, which I think is worth answering. In terms of the size determination, what you do need to do in terms of the size determination, if a worker asks you, are you small or are you medium or large? You do have to do an assessment. It has to be assessed at the time that you were asked, and the outcome of that assessment, you have to provide that to the worker. Now, the reason for that is because where the risk falls with a medium or large size organisation, if the answer effectively is that that organisation has not complied with the requirements, then any risk of any under collection of tax effectively falls back to the medium or large size organisation. That's not the case with organisations that can prove that they are small, but it's part of the reason why it's very important in terms of that assessment being carried out at the time that the contract is being put into place, and ultimately it changes where the risk falls, and so that's why you have to be able to provide the outcome of the assessment of size to the worker who's asking the question. And the other question that, I suppose the other questions that came up, in terms of the other questions that I think were of very helpful relevance in terms of the attendees as a whole, in terms of practically carrying out due diligence on your supply chain, that is going to be different on a case-by-case circumstance, but certainly what we would a service that we carry out for people at the moment is where an organisation might come to us and say, first of all, is there an intermediary involved? Well, depending on who is invoicing you, you may be able to determine that from Companies House. Are there any risks in relation to that intermediary? Again, you can determine from Companies House things like how long it's been in existence, what risk factors in terms of credit scores, etc., might also be relevant. It is something where you will have to document what you've done and how to make sure that you have effectively carried out the requirements that are applicable to you in terms of due diligence. It is, however, unfortunately, a fact-specific answer. We were asked a question about non-executive director services. One thing just to be aware of there is that Hmrc do see non-executive director services as an area that they quite typically will argue should be on payroll. It depends on exactly who is registered at Companies House in terms of being an officer of the company, etc. But that's something that I suppose for non-executive directors, the presumption from Hmrc is that there is an aspect that should be treated as being covered by payroll taxes. So that's an area just to be careful of. Claire Williams, is there anything I haven't covered just in terms of the question and answers there at the end?
We've literally just had another question posted, which is who is best placed within an organisation to complete the CEST and issue SDSs? Is this HR? In all honesty, the answer to that question is it depends who has the relationship with the worker in most cases, because as I said earlier on, you need to know what the working practices are. It's probably going to be a combination of people within the business, if I'm honest with you. I think in terms of going through the questionnaire and working out who's doing what, it'll be the person that's entered into the contract and the person that's working with those workers, probably some kind of project manager. In terms of making sure that the processes that you need to put in place are happening correctly, that might be something that falls on HR or your finance function. It will have to be assessed on a case-by-case, business-by-business basis. Unfortunately, it's not really something that I can say one hat fits all.
And one other aspect on that, again, just I suppose to complete the answer to that question, one thing that it is not possible, or I suppose it's not advisable to do, is to fully outsource that assessment process. Now, what we mean by that is that if you provide or if you go through a process of putting in place SDS determinations or the use of CEST, and you outsource that to an agency where you didn't then check to see whether or not you agreed with their answers, or whether or not you, I suppose, were, as an organisation, properly checking that those were being completed correctly by the organisation that is doing that for you, then Hmrc have already said that they can disregard the status determinations that have been carried out if the organisation isn't properly checking to make sure that the correct factual circumstances are being put in. So the reason for raising that point is just to say, unfortunately, it's not something that an organisation can fully outsource to another party. The organisation has to retain some degree of ownership and some degree of checking in relation to what is being carried out. So we're aware that there are organisations, I suppose there are internet platforms where this is being done solely as a fill out this form. You will automatically get a response. It will automatically be something that gives you an answer. In terms of the process that we're using, there will be a human involved in the process in terms of checking that to make sure that the answers make sense in terms of what is going in, and also just to make sure that in the circumstances the answer is, I suppose, realistic in terms of both the inputs that are being provided and also the outcome that is then being derived by the system. I think we had. Do we have one further question, or is that?
There is one further question, yeah, which I think Claire's answered.
Okay, fine. Yeah, I've seen that. So that one was effectively, will we be able to assist the person that's asked the question in terms of the status determination template or the size status? And the answer to that is yes. Okay. Well, in which case, if nobody has any further questions, then I would say thank you all very much for participating today, and thank you to the team for presenting. This is obviously an area that by the 6th of April, hopefully everybody has a chance to consider what is required and everybody knows what is needed to be compliant. We are in a position where we can help, whether it be status determination statements or whether it be size assessments. So if any of you would like to have a further discussion with us in terms of how the toolkit can work, please do let us know, and we will be delighted to show you what it is and how it works. But if in the meantime, any of you have got any questions that you feel will be relevant, please do ask your usual contact and we shall endeavour to answer them. And with that, I would say thank you all very much for dialing in today.